Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And today is one of those 4 times a year where we get a little peek into Alibaba's business, one of our largest holdings here at Two Stupid Guys Trade Stocks. We're going to take a little look at their most recent quarterly filing and what I did and did not like in terms of the results, whether or not that matters going into the future, and how I'll be adjusting my evaluation of Alibaba going forward, which is a big
Ooh,
shift. All right.
yeah.
Uh, just a little clue here as to what the market thought of these earnings. That would be it right there. Just a big, cliff, spiky down. Not
Mm-hmm.
good.
Not ideal.
Yeah,
Not
yeah.
ideal.
The voting
We
machine
also we
said no.
we Burry sold. So we just did a 13F video. Burry sold all of his Baba. Granted, if you watch the video, we think there's something a little fishy there, but also doesn't help.
Yeah, yeah. We'll link that one above. So as far as where we are in the context of things, don't forget we're still up like 45% year to date. So like, don't get too discouraged over that. That little dip down after earnings here is this little kind of downslide or drop here in the stock chart. We're still up significantly year to date, which is awesome place to be, depending on your perspective. All right. So as a business owner, I try to look at how is the business performing. All right. This is what the business is doing here. Okay. So as far as Alibaba Cloud, this is their management's highlights, right? So this is still a sales pitch on what they think is important. But they did mention that their cloud sector grew up 18%, largely driven by AI related revenue, which was up in the triple digit territory for the seventh consecutive quarter. They still don't give it an actual number to tell you how big it is relative to the business, but any part of your business, even if it's relatively small, growing at triple digits for 7 quarters in a row is pretty phenomenal, right?
Yes. I mean, 18%, pretty awesome. But
Yeah,
the market clearly didn't like something. Yeah.
exactly. And for those of us who've been Alibaba shareholders for a little while, we remember this customer management revenue, CMR, right? That is the high profitability segment of their online retail business, right? That grew 12% year over year for this quarter, which is a big number. This is a number that was negative just like last year, 2-3% almost every quarter. They're
Okay.
now growing it in the double digit territory, which is amazing.
Yeah, that sounds awesome.
Yeah, yeah. And it's not that they're just doing this at the cost of being a less profitable business. Remember, Charlie Munger famously called EBITDA bullshit earnings. But their EBITDA was up 36% on this 7% overall growth, right? So they're growing top line and bullshit earnings, bottom line, at a significant clip. They are, however, going through a major reinvestment cycle, which is why I think the market's a little pissed off at them right now.
Okay.
All right. So they did highlight how much money they returned to shareholders last year and will be planning to this year. Now, one of the reasons I bought into them was, they had a significant cash pile, big kind of free cash flow, and they were buying back shares like crazy. If they highlighted last year, they bought back 5% of the outstanding shares, which is a big number right here. $12
That's a
billion.
lot.
Yeah. Not many companies can manage to, tear up 5% of their shares in one year. This year, they're doing more of the special dividend. Right? They increased the regular dividend and increased the special dividend. Total of $4.6 billion will be coming back to us shareholders. It's actually next month. It's like after June 12th, I think is the X date for that dividend. But the pace of buybacks has come down significantly. We'll talk about that when you actually see the slide about it. All right, their presentation. So this is what they're saying as kind of the big things here. Like I said, top line revenue up 7%. That CMR revenue 12% growth. Cloud growth with 18%. The Alibaba International did have still growing pretty well. Little step down from where they were previously. We'll look at that on the individual side for them. EBITDA, like I said, 36% year over year. Bullshit earnings, yes, I know, but still, it's nice to see even bullshit earnings growing.
Yeah.
Um, Net cash position still in a fantastic place where they have net positive cash by 50.5 USD billion. That's a big number. You
Yeah.
do a lot of stuff
No,
with
that's
that.
disgusting.
Yeah. So here's the share repurchase slide. So, last year we were getting spoiled seeing these big, 4.8,
Mm.
5.8, $4.1 billion per quarter being spent in share purchases. As share prices come up, like I said, 45% year to date, we've now seen the share buybacks taper down to 600 million the most recent quarter. Not great when you consider the fact that it was 4.8 billion last year. But like I said, they're on a major investment cycle and the stocks become more valuable, so they're not getting as much return on their investment for buying back those shares. So they've chosen to pivot towards more of a dividend strategy. Okay.
Right. I mean, makes sense. I also like a lot of people that watch our videos, I actually now refuse to look up the Baba earnings report so I could learn everything in real time from you. So did not know the share back. Yeah, I actually have to avoid everything. Did not know the share buybacks dropped that much, but it
Yeah.
makes sense. They were buying a bunch when it was $80 a share. They're at
Mhm.
130. So
Yeah. I mean, if anything, it shows you that management is a prudent steward of capital, right? They're only doing it when it's at a good price.
yeah.
So, all right, this is something I want to draw from this slide here. So this is some financial highlights of the results from this quarter and then on actual 12-month period. So if you notice the most recent quarter, all of these numbers pretty much are bigger than the year. So 7% compared to 6%, 93 compared to 24, 1,200 to 3% is a crazy number. I don't really like using net income for Alibaba as a metric because they own a lot of investments
They
and they
have
have to,
too many.
kind of mark to market accounting, right?
Yeah.
Yeah.
Don't like that.
So same thing with Berkshire Hathaway. It's not a really good useful metric. Operating earnings is a much better metric when it comes to a company like that. But still, those numbers are much larger than they were on the yearly basis here, right? Same thing when we talk about EBITDA, right? So bullshit earnings, but in this company, it may be more useful because they were not actually talking about, the fluctuations from market to market accounting, but 36% versus 5%. This is telling me that management is on the right track, and in fact, things are accelerating on a quarterly basis compared to where they were on a yearly basis. Right? That's a good sign.
Okay. All right. I mean, that's
Progress.
awesome. I
Yeah.
I'm still waiting for the we lost 8%. I'm
So this
still
slide,
this is fantastic. Like I don't
yeah, this slide I think explains it to a degree. So when you're looking at a business, you're looking at this free cash flow, right? That's the thing that matters the most to me. They generated $3.8 billion in net cash provided by operating activities, right? Think that that's like the raw profit or whatever of the quarter. However, because they're in an investment cycle, and they've talked previously on earnings
mm,
calls about the fact that every server that they're putting in place at the time was basically is a capacity was being completely used up by customers, right? So like they had the ability to basically sell that capacity immediately, right?
right.
So when you have an environment like that, you have to invest heavily in your infrastructure because you are getting what they believe is a solid return, where you're being able to sell that product immediately. So they invested $3.3 billion of that 3.8 billion this quarter alone back into purchasing property, plant, and equipment. Right? That's this line right here. So yeah, yeah. And, we've talked about the major investment cycle with the American internet companies. This is even more aggressive on a percentage basis of how much money they are putting into their cloud infrastructure.
Yeah, this is very reminiscent of like what is it 2022 Meta. I'm I can't I'm actually kind of surprised that this was the negative because to me this kind of seems like common sense when you have $51 billion that you're sitting on. You should be doing this. You should be taking swings because even if it doesn't work, it's just one quarter's revenue. One quarter's revenue over the next 5 years is nothing. So I seems like a good idea to me.
As someone with a long-term perspective, I think it is too.
Yeah.
Management did not give us any raw data on return on invested capital. I think that's what Wall Street would really love to see is like, can you actually show me like the return on my money? Where's is that 3.3 billion actually earning me something? Like I said, I'm referencing back to a conference call. I think it was like last year, or somewhere around the springtime last year, where they mentioned that, like I said, every new server that they were putting on was basically that capacity was being used immediately. So they're saying that the demand is there, and it sounds like it still is, right? Like I'm going to talk a little bit more about the cloud growth in the earnings report as far as like the conference call here in a second. And this is just that $50.5 billion positive net cash here. Okay, so like I said, at the end of the day, free cash flow for this quarter only 516 million. Yeah,
Yeah. Okay. I mean, yeah, but it's not like they didn't make a bunch of money. They just spent
no,
it. That can have
yeah.
in my opinion, a large future return. So
Yeah, absolutely. So they've always provided this chart. This is just a good way of seeing how well they're controlling their expenses. The only thing I really wanted to highlight here is look at this cost of revenue. So because they've pivoted more to this CMR management revenue again over time, they're becoming less and less the direct sales. They're also kind of getting rid of non-core assets like the SunArt disposition. You're actually seeing the cost of revenue go down, which is good. So that means their gross margins becoming higher. Right?
right.
That's a good thing for business.
Absolutely.
They are spending a little bit more money on sales and marketing here, though, come up a couple percent. Now, that certainly them trying to drive that revenue growth, which makes sense. It's just something you have to keep an eye on, longer term to see if it makes sense. But in the short run, I can certainly see that they're going through an investment cycle. I'll give them a little bit of credit on that. All right. So this is another positive slide I wanted to highlight here. Okay. So this is all the subsegments of Alibaba, right? And this is where they're breaking out the EBITDA growth for each segment. Notice a trend here. They're all pretty much positive numbers, and some of them are pretty large positive numbers. That's a good
Yep.
thing. It means that each unit is profitable. Well, not profitable, but becoming more profitable over time, right? So some of them are still negative as far as the actual, EBITDA. So Alibaba International is still negative. Kia now and local consumer services, all of those are negative. Really the only two positive ones are Taobao, Tmall, and then the cloud intelligence. Those are the ones that really are adding to their profitability at this particular point in time. But the other ones are moving the right direction. The growth rate as far as revenue goes, pretty good numbers too. There was this one that was kind of an outlier. They kind of reevaluated the way that they are reflecting revenue for inter-segment business, so that's why it was a negative on the quarter. That got rolled into like the actual core e-commerce business, so that's why.
Right. So I got to say, when in companies you have like dreamers, like founders, and then you have
Uh-huh.
like fiscally conservative
Uh-huh.
optimizers, right? So like I consider Tim Cook not a visionary, but
Yeah.
he's a good manager. The new
Hmm.
iPhone that comes out every year is the same as the. I'm sorry if people disagree with
Yeah.
that. There's nothing. It's just they rely on what they've already built to continue to sell, and it works. Then you have like dreamers that go out of business all the time because they
Hmm.
can't do anything fiscally responsible. And then you have Mark Zuckerberg's a little bit of hybrid. To me,
Yeah.
this is more of a hybrid, right? They're showing fiscal discipline, but they're also invest in AI infrastructure as soon as possible. So I'm very surprised on the down 7% still. this
Yeah.
yeah.
No, I completely agree. It's really that faith in management. Like I think that would be the leap of the quarter that you're really trying to struggle for, is that they're saying we're doing some things, we're seeing some positive signs, but you
Yeah.
have to have faith in us, which is a hard leap if you've been an Alibaba shareholder for more than like a year, because you saw the prior management try to say the same thing. They never
Yeah.
had the results that the current
Nope.
management does
They did not.
to this degree, and they were really kind of, how do I put this, destroying the business for the sake of revenue growth, right? Because they had like the Sun acquisition there. They were getting into their non-typical lower profit margin businesses in order to continue growth. So I just wanted to highlight 12%, like I said, CMR revenue. That's a big number. They're 88 VIP. This is the equivalent to Amazon Prime. Cross 50 million. Another solid thing. These are the kind of consumers that you really want to have on your side over time, right? And then, like I said, in the EBITDA, 8% increase on, in terms of the profitability. So growing the more profitable business line at a faster rate is definitely coming through to the bottom line of, at least this segment, which is a great thing to say.
Hmm.
Alibaba International, I already kind of mentioned that 12% decrease. If you actually look at, they talked about how the growth rate was still pretty solid. It fell off quite significantly when we're looking at, the year over year. So 22% versus, I can't quite see this one, 29%. Sorry, my camera's in the way. But it's still growing at a significant clip, but it fell off a lot. Part of this is trade wars, right? And this is the quarter where we saw that really start to take off, where we saw international kind of disturbances in trade, and this is their international unit, so it makes perfect sense that they would be strongly affected more so than the domestic Taobao Tmall unit, but it was.
Right. I would assume. I mean, most of that's going to resolve now that there's trade deals. A little bit
Yeah, kind of.
iffy. If trade
Yeah,
deals today, maybe not tomorrow.
yeah. Yeah, exactly. So 18% growth, big number there. Not only are they seeing like a significant uptake in their actual kind of providing of AI services to on their cloud segment, but it's still profitable at this point. So the positive EBITDA grew 69%. So it was a profitable unit before this, and that profitability grew at a very, very big double digit number, which is awesome to see.
Sexy.
So when you're growing your EBITDA at 69%, you're growing your top line at 18%. Doesn't it make sense you wouldn't be investing $3.3 billion into this segment of your business?
Yeah.
I would think so.
Yeah. I mean, sounds great. I don't have a
Yeah.
problem with this.
Yeah, I would absolutely be throwing money at that. And then, like, this is, like I said, just reiterating that point about the decrease of 12%, but the increasing integration of logistics offering into our e-commerce business. So they just kind of consolidating them into the Taobao Tmall. All right. So my conference call notes here. All right. This is interesting. They talked about, so 18%, very, very solid number. That's what we had long hoped is going to double digit territory for cloud. You actually saw that it was not only 18% for the whole quarter, but it was kind of backloaded. They had the Chinese New Year at the beginning of the quarter. So it was after that they saw a lot of customers coming online with demand for their cloud computing. And they said not only did they notice it was backloaded on the Q1, that trend has continued through April and May. So they did give us a little bit of this quarter kind of color there. And they also believe that the kind of upcoming cloud growth rate is the longer run rate we can expect. So 18% is what they're hinting at there is they think it's on the low side. So they're actually going to be growing their cloud segment at more than 18%. And that trend has continued from only not the
Oof.
beginning of the end of the first quarter here, but the beginning of the second quarter so far this year as well. And they think it's going to continue into the future. So they look for a cloud number that's in the 20 something percent range. I'm thinking maybe next quarter. That's what sounds like they're hinting at. They didn't give us that number, but that's my stupid guy interpretation of it.
So this is going to be a question in the comments, so I'm just going to ask
Uh-huh.
it. Imagine you have a certain amount of money and you can only throw it in one stock. All
Yeah.
right. Now you can throw it in Nvidia, you can Google it, it could be anything. Would this be in a top 10 for you? And it's a hold for
Sure.
5 years.
Yeah, yeah. It's actually, I think there's a lot of optimism, and I'm really happy with what management's doing. They're not only kind of divesting non-core assets, they're growing the cloud, which is the future of the business, which is a very high profitability business, at a significant rate, and that rate is increasing. They're reinvesting heavily, and they have a very shareholder-friendly management, which knows that as they start to kind of reap the rewards of this, they will continue to pay that out towards shareholders, be it through share repurchases or dividends. Um, I think it's a nice place to be where multiple stars have aligned, and we're still at a reasonable price, I think, for the stock. So I think it's a solid opportunity. Now, is this Meta at 80? No, but
Yeah.
uh, is this Google at 150? Yeah, yeah, it's in that territory.
That's a better comparison.
Yeah.
Yeah.
So high profitability business CMR is still growing, supporting the non-core business. I already basically said that. And this heavy cloud AI investment. Like I said, it'd be nice if they gave us a little bit more color as far as like the numbers on return on investment they're seeing here. And if that's still the case where every server that they put online is being utilized at 100% capacity almost immediately, like it was last year. If that's the case, like, yeah, you should be investing $3.3 billion. Maybe screw the dividend. Go ahead and just buy some more
Okay.
servers and put them in business,
So I was going to say that. I was going to say screw the dividend, buy more servers. That's funny. Yeah, 100%. I'm down for that. It's it's if it's a swing for a potential home run, especially with them saying, "Hey, the increase has continued even after the quarter ended." Screw it. I don't want a dividend.
Yeah.
I would rather more AI infrastructure.
Yeah, absolutely. One thing I would note too is that you know, I will no longer be using my free cash flow yield calculation on this stock because it doesn't make sense at this point.
Oh
I,
man.
I could go and do the number if you really wanted to me. Their market cap's like 230 billion, 180 billion dollars net. They only had 500 million dollars in free cash flow this most recent quarter. We're talking about say annualize that out at 2 billion into a 200 billion dollar company. That's like 1%. That's a horrible free cash flow return business, but that's because they're going through a massive investment cycle, the likes of which comparatively is bigger than Google, bigger than Meta, bigger than Microsoft. All right.
Man, never thought I'd see the day. Holy crap.
Yeah.
Oh
Yep.
geez. Finney's growing up. He's going to stop using Intel's model. All right, guys. Have a good one.
Catch you next time.